Welcome to the All Financial Hour podcast with Steve All.
All right, Steve, I got to put you to work here. There are some folks out there that are still predicting a recession. There's one financial company that sees our markets and economy differently. The European finance giant UBS believes the U.S. will experience a roaring 20s economy with GDP growth over 2%, inflation below 3%, the Fed funds rate at 3.5%, and the 10-year Treasury yield at 4%. What does all this mean, and are you that optimistic?
Well, that's kind of the things when it comes to, I don't care if it's politics, it's economics, it's whatever. You're going to have people with completely different opinions, especially as economists. They've all got an opinion, and they're not the same. And the thing that is difficult is I don't care what you believe, the market's going to go up, the economy's going to be great, the market's going to be terrible, the economy's going to go down. If you've done web searches, those web searches are going to take you to where you believe. So if you're one of those people out there that believe that the market's going to go crazy up and you search, that's what you're going to get. I could take that other person that they believe that the markets are going down, and they could both do the same web search and they get completely different information. Because of I don't know how they do that in that world. That's outside of my expertise. But it looks at it to the point and sits here and says, it's going to take you where you're at. I don't care if it's political parties. I don't care if it's economy. It's whatever. Things that I look at it when it starts to come to the economy. One, interest rates are starting down. It usually takes a little bit of time after an interest rate deduction for the economy to really allow that to move in. Because if you were planning on buying a house and they dropped it by a half a basis point, which they did, but they're talking about doing more in the future, would you jump out there and buy something right now or wait until those next couple drops? And that's why I'm saying there's usually a delay when interest rates are falling for people to react. Because if I'm going to buy a house, that's a big expenditure. If I could save a half a point on my interest, that's gigantic. So those are the things that we look at. The other thing that I look at is CD rates. Everybody loves the CDs and the money markets right now. Well, guess what? Those are coming down too. Well, as those start to come down, there are trillions of dollars right now sitting in cash and cash equivalents. What's going to happen to those dollars when they get back down into those low ranges that they were 2 years ago, 3 years ago? That money's got to go somewhere. So there is a lot of money out there that a lot of people believe will come back into the market in the future. So that's where we have to look at it. We got headwinds, we got tailwinds. Right now, what's going to happen with interest? We believe it's going to come down. We've got an election that's still causing problems right now. Which way is it going to go? And as I always like to talk to people around election time, because it's always fun, around election, because it's the same thing. One, I don't believe we're going to know exactly who's going to win the election on election night. It's not going to happen. It's going to be announced sometime in the future. Then we're going to look at it, and as soon as that announcement comes in, I'm going to get a call from the client that believes everything is fantastic. Go as aggressive as you can possibly be. That same day, I'm going to get a call from somebody from the opposite side of the aisle, and they're going to say, I believe that everything's going to crash. Please take me out of the market. I think they're both emotional decisions, and it's really not going to happen. Over the last 4 presidential elections, the market has increased for all 4 of those presidents. Different parties goes up. Long-term history, there's not a big difference in who the president of the United States is. So the idea around it for me is, do you have a plan? Because, see, we can take those plans and we can adjust your investment philosophies without the emotions. Because to me, that's what hurts people the most, is when they make emotional decisions about their retirement or about their investments. So if you're not prepared for whatever happens, give us a call now. Ask for that comprehensive retirement plan so we can give you what should be focused upon, the plan. Because if the plan works, it's going to work when markets go up. It's going to work when markets go down. Because I can promise you, They're going to do both in the future.
You know, one strategy to mitigate your taxes is something called tax loss harvesting. But Steve, explain this to us. What is it?
Tax loss harvesting is where you look at your after-tax or non-qualified accounts, and we look at those and say, okay, are any of those accounts negative? Do you have tax losses on them? Because if you do, that can offset some of your tax gains. So we can look at it to a point where we either want to get it down to you pay as little tax as possible or possible carry forward. So those are the things that we look at, and that's usually done in the fourth quarter. What I like to tell people, if you're looking at stuff like that, give us a call now, especially if you have mutual funds. Mutual funds, they have to pay out capital gains, interest, and dividends usually once per year, and most of them do it in December. So if we're ever looking at possibly selling a mutual fund, we want to do that before December. Why? Because if you don't, you're going to pay the taxes even though you held all year long for anybody that might not have. So come in, do a tax analysis with us. I think it's the greatest thing that you can do for your retirement is to reduce or minimize taxes in retirement. Call now, ask for that tax analysis.
And once again, it is complimentary, no cost, no obligation, 636-230-8824, 636-230-8824. Also, real quick, folks, if you want to mark on your calendar, coming up November 12th and the 14th, you have this event about taxes and retirement. It's at Twisted Tree. What are we going to get out of this event?
Reducing your taxes is the greatest thing that you can do for retirement. So we're going to talk about some of those things that have been proposed for future taxes. Most people believe they're going to be higher in the future. So it might make sense to look at it and say, if I can pay some taxes now to reduce taxes in the future for myself or my children, would that be advantageous? We're going to talk about those things at that event. Again, it's at the Twisted Tree. Tax analysis takes about $500,000 to make it really make sense.
Election day is just around the corner, and there's lots of folks out there worried how the stock market will react. Here's Jonathan Fahey, and he's an analyst on Fox Business. He says history tells us that we're going to be okay.
Regardless of who's in office, here's what we've actually found. Here's what the data shows. The last 4 elections, the stock market was up every single time after the election, regardless of who was in office. So I have a lot of optimism in the American economy. I don't have a lot of faith in the government and the politicians, but I do know the stock market in the U.S. over the long haul is going to go up and to the right. So you want to be a part of that roller coaster and stay in the game.
Okay, so I get, being a part of staying invested, but also there are clients that you work with. They have a big decision right now. How much do I want to be in the game? How much risk do I want to take? And how are you answering that?
I agree with Jonathan on that. The presidential election, usually shortly afterwards, it doesn't matter. Usually our volatility is prior to the election, that's what it's been. Since about July of this year, we've had a lot of ups and downs. Pre-election, who's going to come into it? So I believe that the best thing that we can possibly do is remove as much emotions in our investing as possible. Joe and Ellen, clients, had come in for a review, and they were concerned with the stuff that's going on in Israel with the presidential election. They said, okay, we don't know if we really want to be fully invested at that time. So if you're in that same situation, that's what I like about Market Guard. Market Guard has that availability to use our tactically managed portfolios. Our target portfolio gives the money managers the availability when their models say it's time to reduce your equity exposure. They could take it down by 50%. So when we actually look at that right now, the 60-40 model is not completely invested at this time. Why? Exactly what everybody's talking about. Headwinds, presidential election, interest rates, inflation, Israel. All these things are headwinds in our market right now. And so we might want to be a little bit defensive. It gives us the availability for that base of a person's portfolio to say, hey, let's not be as aggressive with that. And we can take different pieces and put it in different models that can be more aggressive. That's what I like about it. It gives everybody the opportunity to be invested within their comfort level. So if you're concerned about the markets, elections, all the things that are going on in the world, give us a call now. Ask about Market Guard. Let us run that risk-reward analysis for you and see how we might be able to assist you in your retirement.
Again, this is complimentary, this risk-reward analysis. Also, find out more about Market Guard. How can that be of assistance to you within your income and retirement plan? 636-230-8824, 636-230-8824. Don't forget about that website, yourmoneymattersstl.com. If you have a 401k, how often does your employer hold a seminar with a representative to at least answer a couple questions about the plan? Probably never, right? Well, that's why some people turn to their financial advisor, someone like you, Steve, for help, even while they're still working and contributing to the plan. So how often are you asked to help in this area? And of course, what type of advantages do you bring to the table?
Well, when we sit down with people, if you're under 59 and a half, there's really nothing you can do with your 401k. So we do assist people with recommendations around their 401k. The couple things that I want to remind people of, that 59 and a half rule does apply to most people. Most 401ks will allow somebody that's 59 and a half to move it away from the 401k into an IRA account. And that's a non-taxable event if it's done properly. Institution to institution, it's not taxable to you. A lot of people don't realize, because when they go in there and they set their risk reward or what they're wanting to do, they don't realize that their current holdings, the big amount of money that they have in there, you can set that at one grouping or one choices for your retirement. That new money that you're putting in on those weekly, monthly, semi-monthly, however those contributions are going in for you, you can set those more aggressive so that we can protect the money that you've already got in there, but we're being a little bit more aggressive with the money that we're adding. So those are the things that a lot of people don't know. We have the availability to do an analysis of what you have in your 401k and then come back to you with, if you're a 60-40 investor, what would be close to that for you within your plan. So those are the things that we look at with a 401k. Most people don't get the advice. Our clients, we will sit down and we will make recommendations for their 401k. So if you're 59 and a half and have a 401k, give us a call. Let's look at what some of the options for you could be. Or if you're not, let's just look at it. Let's do a 401k x-ray and figure out what would be best for you as you're invested in your 401k.
It's hard to believe that we've been without Apple co-founder Steve Jobs for 13 years.
Wow.
Isn't that incredible?
That's unbelievable.
I thought it was just yesterday. 13 years flies by. Well, here's one of his famous quotes. He says, "Being the richest man in the cemetery doesn't matter to me. Going to bed at night saying that we've done something wonderful at Apple, that's what matters to me." And, this makes me think of that person who delays retirement because they want to get to a certain number, a certain place, if you will. So do you see people relax just a little bit in retirement and they get this perspective on what is truly important and what it is? For example, he was a type A person in his working years. He'll be a type A person in retirement. Is that the kind of mentality?
The big thing around that is when it gets to it, because when your question around a retirement number. I remember years ago, everybody was walking around with their retirement number. And that's what it was going to take to retirement. And you'll hear some of these places, you need 1.5 million, you need this, you need that to retire. So that's supposed to be your number. The problem with that is that number changes every day, depending on what market does. It goes up and down. Depends on your lifestyle. Depends on your health. Depends on how long you're going to live. So those calculations would have to be done on a continuous basis to figure out what your number is. And I've had the people that come in there and say, I want my, quote, IRA retirement accounts to be X, and I look at it and I'm sitting there going, okay, your plan works if you're not that aggressive. And they go, yeah, but I still want this. So we look at it and I said, well, do you have the capacity to take the risk? Well, that's obvious because he's already doing it. So it goes from there. Do you have the attitude that risk is there? Are you acceptable to it? Yes, he was definitely in that category. And then I asked the major question, do you need to take that risk? And that's when he kind of refocused a little bit. And he said, I don't really need. Because I look at it to the point when people are talking about their risk reward, because everybody's different. If the market, if you got a 25 to 30% increase in your market value of your portfolio this year, would it change the way you retire? And I'll be honest, most of our clients, the answer to that question is no. But what if you had a 25 to 30% decrease in the value of your portfolio? Mm-hmm. Would that change the way you retire? Again, most of our clients, the answer to that question would be no. But psychologically, it would. I don't have that pillow anymore. I don't have that extra thought process around what if I have a long-term care exposure. So that's when we look at it. Do you need to take the risk? My investment philosophy is give me the best return that I could get with the least amount of risk possible. I think that's what we're looking for. I think your retirement should be based on need, not greed. And I think it saves a lot of headaches when we have those down markets. We haven't had one in a while. Mm-hmm. 2009 was a long time away for a long downturn. Right. But we probably will have one in the future. Are you prepared for whatever happens in the market? Give us a call now. Ask for that risk-reward analysis and let us show you how you can get the returns that you're looking for and possibly not take as much risk as you currently are.
Thanks for listening to the All Financial Hour podcast.
Insurance products are offered through the insurance business All Insurance Group, LLC, AIG. All Financial Group, LLC is an investment advisory practice that offers products and services through Impact Partnership Wealth, LLC, IPW, a registered investment advisor. IPW does not offer insurance products. The insurance products offered by All Insurance Group, LLC, AIG are not subject to investment advisor requirements. IPW and All Insurance Group, LLC, AIG are not affiliated companies. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. All Financial Group, LLC is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by All Financial Group, LLC.
This radio show is intended for information purposes only.